Welcome back to Live Lunch and Learn. I am your host, Lambros Demos, and today is Wednesday, February the 2nd, also known as Groundhog Day, which is quite fitting because many people at this time of year get stuck doing the same thing over and over again. I'm talking about RRSP contributions. Not saying it's a bad thing, not saying it's a good thing. All I'm saying is that many people do it, maybe out of habit, or maybe they don't know what else to do with their money. My guest today has a different view on RRSPs, and he's here today to share his wealth of knowledge. He has been in the tax and investment business for over 30 years. Gerry Hogenhout is a chartered professional accountant, as well as a certified general accountant. He runs his own public accounting practice, helping people save money on taxes, as well as a focus on real estate. Welcome to the show, Gerry.
Thanks, Lambros. Appreciate the opportunity to join you here today. Thanks.
My pleasure.
I always welcome any opportunity I can to share information with viewers and give them the right information, the education they need. So.
Yeah, no, it's grateful to have you on. Thank you for joining us here today. I know it's timely as well. RSPs are coming up, tax season's coming up. But before we get into all that, tell us a little bit about yourself, if you don't mind.
Yeah, absolutely. As you mentioned, I'm a chartered professional accountant. I started with 40 years ago, I started at Deloitte Touche Chartered Accountants, where I spent 10 years there, worked in their tax department, their small business department, which was just an unbelievable learning experience and a great foundation for everything else I did after those years. And which, after the 10 years, in simple terms, I set up my own tax practice, expanded that into the investment world. And here I am today, still doing the same thing. So it's been a long journey. The investment industry I love it. The more I work in these two professions, the more I realize how integrated they are, the financial planning / investment world and the tax world. And I also find out how little they work together, which is really a sad comment because they're so integrated. But we find the accountants are busy doing their taxes, with all due respect, head in the sand, 100% doing taxes. You got the investment side of the world where they're trying to sell investment products. Your biggest expense in your life is taxes. So these two things need to be integrated, and we just don't see it. Accountants really don't talk to financial planners. Financial planners really don't talk to accountants as much as they should. Yeah. So to be deeply involved in both of those professions is interesting, and certainly I see the value in integrating those two. Again, I'm a believer your income taxes are the biggest expense of your life. So whatever you do from an investment perspective, financial planning perspective, you got to reduce income taxes. That's step number one. So.
Yeah. Oh, 100%. I agree with you wholeheartedly. And I'm glad you brought that up because even in my industry, we get that a lot, or any self-employed person, really. I mean, especially if you have your business for self, you're trying to reduce the amount of taxes that you're paying. However, that's going to then ultimately hinder you in the purchase of a home because they're looking at your income, right? So the two don't always mesh together. So there's a fine line there. It's a fine balance that you have to achieve in order to A, not pay or save money on taxes, but B, also be able to qualify for mortgages and things like that. And I know mortgage is a little bit outside of your scope, but it's kind of the same thing what you're talking about.
Yeah, I agree 100%. And thanks for bringing that up because that is another thing when we, do planning, financial planning, investment planning, tax planning, if the approach is to qualify for a mortgage, that's where we need to bring in the qualified real estate agent to go, hey, what do we need to give you to get you the place these people want in order for them to qualify for the mortgage that they need? So it's a very comprehensive field, and it's so integrated. And again, it surprises me that there's a real lack of integration with all these things that we do, and it's a maze. I feel blessed that I've been in the business. Held every investment license you possibly could, chose not to give them all up. I do not hold an active investment license at this point. I do not want an active investment license. I describe it with an investment license. I'm not being critical, but an investment license really simply allows you to process an investment order. That's it. So but the problem is when you have an investment license, you're licensed by a company. They tell you, the company dictates what you have to sell to clients, and that just drove me crazy. It's not the right way. The client, I know you and I are in the same wavelength. We believe in educating people. We believe in giving the right information, so they are deeply involved in my world, in the investment products they want to be invested in. I know in the real estate world, education information is so important to make sure the person ends up in the house that they want to be. Now, that's a little more obvious in the real estate world. It's less obvious in the investment world, but it's the same principle.
Yeah.
I'm proud to say my clients are all invested in investment products that they want to be invested in, be it real estate, be it whatever they want to be invested in.
That's great. That's great. So let's backtrack a little bit here. You said you held every license available to investment professionals, and you said you're the only person in Canada that's done that.
That holds a CPA designation. So I'm not aware of other people who have held all 5 licenses.
Okay.
But I know there's nobody out there that's held all 5 licenses at different times. You're not allowed to hold all the investment licenses at one time, but I'm the only person that has a CPA designation and held all those licenses. And I don't say that to be boastful at all. It's almost embarrassing. Like why didn't you just stick with one? Why are you jumping around?
Fair enough. Okay.
And the answer really is, when I first started in the investment business, I myself was a real estate investor from before I got into the investment business. And I always thought that made sense. There's a bricks and mortar. You get a 90% mortgage, you put 10% down, you put a tenant in there, the tenant pays down the mortgage. That whole model sounded so logical and made a whole lot of sense to me back then, as it still does today. So as I got these licenses, I just, when you have an investment license, you're not able to go into the real estate market and provide the products or service that you want to provide the client. The investment industry, I don't mean to be so critical, but it's very badly structured. That, again, if you hold an investment license, you're told to sell this, not anything else. Don't talk to the people about real estate. And so I kept going to a different license because I thought maybe that's where I find real estate. And sooner or later, I realized, geez, I've held every investment license you can hold, and I still haven't satisfied the way I want to provide investment advice. So,
yeah, no, I only brought it up because you have a unique perspective on the market, which leads to this critical look that you have for it, right? And the way you just mentioned that, let's backtrack again. An investment professional wants to, but leads you towards their own products, right? They're not going to lead you into anything outside of that, right? So they're limited to what they can offer you.
Yeah, and that's 100% true. And again, it's not the fault of the advisor. I'm not being critical. There's so many great investment advisors out there. I'm not criticizing the investment advisor. They're working in an industry that is really skewed against the investor. The industry does not want you to know the type of information that I share with people. I'm open book. This is how the industry works. This is what you need to know to make a decision. So it's all about licensing, and the banks and the big investment companies control the investment industries. They want you in their mutual funds. They make a fortune in their mutual funds.
Of course.
I'm somebody that says when we manage money, there's 2 components. One is the rate of return, the expected, the targeted rate of return, and the other is the protection of capital. Yeah. And the industry, I always call it, puts the rate of return first. We can make you this much money. Invest in here. Look what we've done in the past. This is great. So they're chasing returns without properly protecting capital. I do it the other way around. Let's protect your capital first, and then let's look for a rate of return. And there's nothing better that I've ever found to protect capital than real estate, the proper real estate. There's good real estate, bad real estate. But if your investment is secured by good real estate, we've protected your capital, and from there you get a decent rate of return. We don't try to make people 20-25%. We try to make them 10 with their capital properly protected with the proper real estate.
Okay. And real estate doesn't just mean bricks and mortar. I mean, what I do, buying and selling houses. There's other channels of real estate investing.
Yeah, I mean, the way I describe it, look at a house, look across the street, and look at that house over there. You can own it
Mhm.
individually, duplex, triplex, or your own rental property. You can own it as a group, which are
Yep.
real estate income trusts.
Okay.
You look at the same house, you can lend against it. Private mortgage lending is a great way to generate a good investment return. You can do that directly. So
Mhm.
private mortgage lending, direct lending. You can do it as a group, which is a mortgage investment corp, a MIC. So
Yep.
all those investment products that I just mentioned, either you own the property yourself, you own it as a group in a REIT, you lend against it yourself, or you lend against it as a group as a MIC,
Right.
all have the same security, which is property, which is real estate.
Okay. So let's go back again to the financial advisors. Uh, how does somebody know? I mean, you obviously have the background for it, but somebody knows. How does somebody know if their money is being managed properly?
Well, I mean, again, I mean, I kind of say it
Maybe I
hesitant.
opened up a can of worms here.
I say it hesitantly, but I'm critical because they
Yeah.
don't. And
Okay.
I have seen so many people try to figure this out. And the industry, the investment industry, does not want you to know the information that I share with people. They literally don't want you to know that, because a licensed investment advisor cannot put the best interest of their client first. Their fiduciary responsibility is to the company that licenses them. That's very sad. Okay. And that's not fair, but that's the way the industry is. So how do you get around that? Again, we're a company. We don't have investment licenses. We don't sell anything. We have access to everything. So I've structured my company that we have access to all of those 5 marketplaces that you require a license to access. I just go through a licensed advisor, make referral arrangements with those advisors. But the key thing is, by not having an investment license, we can create our whole business model around real estate, which we can't do if we have an investment license. So we do all kinds of real estate stuff: fix and flips, joint ventures, limited partnerships. We go to third parties to access.
Right.
So we can really focus on, most people like real estate,
Yeah.
so we can create real estate related investment opportunities for those clients without any bias at all. So
Excellent. Excellent. No, that's very curious what you say, because myself, being in the real estate industry as a real estate broker, my fiduciary duty is towards the client, right? So we have to put our client's interests ahead of our own or anybody else's. So I find it curious that it's the opposite in the financial world. They have to put the
it's funny you
company's
mention that, because if I kind of relate to what I just said to the real estate world, you're a real estate agent. Now, let's just say hypothetically, your real estate license,
Mhm.
you had a license to sell a condo, you had a license to sell a townhouse, you had a license to sell a detached home, you had a license to sell a cottage.
Mhm.
Now, if somebody went to see you and you held a condo license, you would be selling them a
Only selling
condo. You would
condos,
say,
right?
don't buy a townhouse, don't buy a detached house. You would be selling a condo. And that's
Okay,
the way the investment industry works.
I see.
So they pigeonhole you into you want one license is an MFDA license, a mutual fund license. Another one is an IROC, a stocks and bonds. Another one
Oh,
is
I
a
see.
private equity. So
Right.
you're pigeonholed into that store, I call it, and you can't get out. And again, the real estate world translation would be if you were specifically licensed to sell condos or specifically townhouses, but you're not. You're a real estate agent. You can sell the client whatever they want. And that's the same playing field that I would hope in the investment industry, which is not there other than the way we provide investment service like Canadian Investment Services, because we're not
Yeah.
holding a license. So
Yeah, that's a good analogy. Thank you for that. That was great. So a novice investor, then. I mean, I know everybody's different. They have different goals. They have different, risk tolerance, etc. But if somebody is young, let's say, and they starting to save money, what would you recommend to them as a novice investor?
well, again, education is an important part of it. I mean, it's interesting the roles that we play in people's lives. We come into a person's life, and everybody is different. Some people are like, Jerry, I'm busy. Here's my money. Do whatever you think is right. That's fair.
Okay.
I like dealing with people who want to learn So, any young or old, we learn every day. You've been in the real estate industry forever. I've been in the investment. We learn every day.
Yeah.
So the young person coming in, I can't overemphasize that, get the proper information. I've summarized my thoughts into a little booklet we'll talk about toward the end. That gives you a lot of the information that you need to know.
Okay.
And be invested in an investment product that you want to be invested in. That's the key. That's the whole key to it all. Get the right information. Now, a young investor, I mean, boy, oh boy, it's quite a world we live in today. We've seen the housing market just explode the last 2 or 3 years.
Yeah.
My heart goes out to the younger generation that's trying to get into the housing market. I don't have an answer for you. I don't know how you get into the housing market. From a financial planning point of view, it's kind of interesting. We deal with people, I always look at, your 20s, you learn stuff, 30s, 40s, 50s, you're earning income, that it comes a point that you can kind of take a breather and live off the assets you've earned. And now we're dealing with all these people in their 50s that have to remortgage their houses to try to give their kids some money to try to get into the housing market. It's a vicious circle.
All the time. We're seeing that all the time. Yeah.
I mean, starting out, people, I'm not a big fan of the stock market, but, monthly investing is magic. If you're a young kid, I say it to my own 2 kids, put $100 a month aside, get it working. Dollar cost averaging, we call it. Get that working for you. One of the things I learned from day one in the investment industry that's kind of stuck in my head is pay yourself first.
Right.
Get your paycheck, take 10% of that, 15% of that, and put it into something. Don't spend it.
Fair enough.
And that always stuck with me. And those people that do that, especially the younger generation, it becomes magic later on in life. The whole dollar cost averaging investment is a mortgage in reverse.
Yeah.
Where a mortgage, they're killing you on interest on the first payment and eventually gets paid down. Now you reverse that out on an investment strategy where, you don't see the big effects at first, but boy, once you're in 20, 30 years into that thing, it's compounding like crazy.
Yeah, I'm glad you mentioned that, actually, the dollar cost averaging. So just for the benefit of our audience, maybe we could elaborate on that a little bit. So basically, my understanding of it is you're putting away, doesn't matter what the amount is every month, or doesn't matter, again, the frequency, could be weekly, could be monthly. Market's up, market's down, you're still putting in the same amount, because over time, that is going to be the best way to invest, correct?
Yeah, so the dollar cost, the whole concept is, again, I'm somebody that's a little bit critical of the public markets, stocks and mutual funds. I'm not saying you shouldn't be in there. Don't get the wrong message. I'm just saying there's more risk than you realize.
Mm-hmm.
And with more risk comes a greater opportunity for returns. We can make a lot of money in the stock market, but in my world, it's a bit of, there's your casino rama there, go for it.
Yeah.
Maybe that's a little extreme, but when we do dollar cost averaging, when we buy stock, when we buy mutual funds, we're buying at unit prices, and those unit prices fluctuate every day. Every day we turn on the TV and the market went up, the market went down, which means the unit prices are going up and down.
Okay.
If you're sticking $100 a month or 200 or 300, whatever you can afford, monthly, weekly, bi-weekly, you're buying units. So if the unit's $1 and you put $100 in, you're buying 100 units. Now the market goes down. It goes down to 50 cents. So you've lost half the value. You're still putting $100 in, but you're buying 200 units now.
Mm-hmm.
So now when the price goes back up, which it should, I'm not saying it always does, but it should. Now you got way more units. The price goes up, and that's where the magic is. So it takes the guessing game out of the market. I used to be a stockbroker on Bay Street. I hit a lot of home runs, but I struck out too. I've kind of concluded nobody can accurately predict where the market is going. 96% of fund managers never beat the indexes. That's a sad comment. They're paid big bucks to beat the index. What are the indexes? The TSC 300, S&P 500, Dow Dow Jones, 96% of the time they never beat the index.
Wow.
So why don't we just invest in the index? And that's the way we model our business model. The index, that's what robo-advisors are. You may have heard the term robo-advisors. All they do is cut the management fee way down and just invest in the indexes. That's all they do.
So robo-advisor would be like an app, something like Questrade or Wealthsimple or something like that?
Wealthsimple is a robo-advisor. Just Wealth is a robo-advisor that we use. Questrade is really just a brokerage account. So if a client says, hey, I've got some money, I'm going to put 10 grand into an account and play around with it in stock, we'd open up a Questrade account. They can buy their stock that they want. So that's how that would work. But the interesting thing we went through when I worked at Deloitte Touche, we did a lot of what's called IPOs, initial public offerings. We would take private companies and convert them into public companies. And that whole process was extremely interesting. Without going through a deep dive into it, what happened was we take these companies public, we'd value them. Let's say they're $2 million. We'd issue 2 million shares. We'd go to the market with $1 million minus one because the owner wanted control. The share is worth $1. We go to the market, it traded $2, $3, $4, $5. But the thing, the protection of capital is $1. And then let's just hypothetically say everything went great. We got the client in at $4. A year later, it's at $8, and they think, this is awesome. I doubled my money. The real value of your investment is still $1.
Right.
Where's the problem? And that's true with all stocks on the marketplace. So that's why when I talk about protection of capital, and we go back to the real estate, I'm going, hey, the real estate is worth what it is. When we deal with multi-unit, we're dealing with a cap rate valuation method, and that's as good as it gets. We know what those buildings are worth, and your investment is protected by that value.
So just hold that thought for a second. We have a nice compliment here from Karen Carrington. Great convo, Lambros. Great info, Gerry. So very thankful. So it's good that our audience is getting some value out of this. This is great.
You mentioned RSPs too.
Yes. Let's talk about RRSPs right off the top. So do you think it's a good idea for people? Is RSP season it's coming up at the end of the month here? March 1st, I believe, is the deadline. Should they go to the max of their contribution? Should they not? What's your idea? What's your
So I'm once again, I have a contrarian view of most things that people.
I welcome
where you get your advice. So there's a reason why the banks want all your money into an RSP, because they make humongous fees on the management fees. Now, my opinion on RSPs is a bit extreme, a bit critical. No, I do not think RSPs should be used for retirement savings. I think RSPs should be used simply for a tax strategy. You're getting a tax deduction going in and you're paying tax going out. We want the tax deduction going in to be much higher. If we can save 40%, 50%, putting money into an RSP, I'm all for it. Now we're going to strategize to try to get that money out at 20% at a much lower tax rate. So I only use RSPs from a tax strategy point of view. From a retirement savings point of view, I would much rather use corporations. There's other vehicles that we can use to save money. You do not need an RSP to save up money for your future. You need some vehicle. You need something, some strategy, some financial planning to make sure you have money in the future.
Right.
Corporations, in my opinion, are much better than RSPs. I'm somebody that's done probably 400 final death tax returns. RSPs, they can be subject to 50% tax on your demise. And of the 400 I've done, I'll bet you 200 of those tax returns, we've sent half of the RSP to CRA.
So hold on a second. You're talking about
such a
sorry, Gerry. If somebody dies and still has the RSP but hasn't cashed it out yet, is that what you're saying?
Correct. So you do what the world wants you to do. Put money into the RSPs. Put it in. No one's talking about really emphasizing on the tax benefits. Just put money into the RSP. You're going to see it over the next 3 weeks. The banks, RSPs deadline, February 28th, put your money into the RSPs. And I'm like, whoa, hold on here. Whoa. Let's just wait and make sure that we're getting the tax benefit that we want from the RSPs, because we as individuals are in different tax brackets. We're at 20, 30, 40, 50. There is 0 point in my point of view putting money into an RSP if you're getting a 20% tax deduction. Don't do it. 30%, Maybe. 40% saving, sure. 50%, 100%. Let's go do it. So those things have to be factored in. But if you do contribute to an RSP and you have lots of money in there, which lots of people do, that's a ticking time bomb, a ticking tax time bomb, because on your demise, it can go spouse to spouse tax free. But the minute the second spouse passes and that money goes to your children, that entire amount of your RSP lands on your final tax return. And again, out of the 400 I've done, 200, more than 200 of those tax returns, we've sent half of the money in the RSP to CRA. And I'm the one that gets to talk to the kids and goes, sorry about your parents. They left you $500,000 in an RSP, and we got to write CRA a check for $250,000. And that's a sad comment. That's a sad discussion to have. And I've had it way too many times. And it goes back to what I said at first. It's just simply, it needs to be a better integration between the investment / financial planning world and the tax world. And it doesn't happen as much as it should. So I think having your investment strategy looked at from a tax perspective is critical. I've seen so many strategies that I'm like, why have you done this? This makes no tax sense, what you're doing. And they're like, I don't know, this is what my advisor told me to do. And it's like, well,
Yeah, that's it. It comes back to education, right? And being informed and allowing the client or the consumer to make that informed decision, which is...
Yeah, I think you described it best when you made the introduction. RSPs, good and bad, 100%.
Sure.
They're good, they're bad. And what, how do you determine that? Proper information, proper education. You and I both buy into that.
Absolutely.
What we provide for our client. Let the client decide. Don't let the bank tell you to put money into the RSP. You decide if you want to put money into the RSP once you get the proper information and education.
Exactly. So speaking of which, that's a good segue into your little booklet. I think you have a little freebie, a gift for anybody watching today.
Yeah. So what I've done, again, you probably sense I'm a little, I don't know if critical might be I'm certainly someone that explains how the investment marketplace works.
Okay. Yeah.
And I think people should better understand it. So I've actually created a booklet, hot off the press. And so an investment manager and a better approach. And I have an electronic version. If anybody is interested in it, just send me an email. Gerry at CanadianInvestmentServices.com. Glad to send you an electronic copy. It's only 6 pages, but it really summarizes a lot of the stuff I've talked about here today. And I really think it gives you a better approach. You look at the investment world differently once you read these 6 pages. And it just gives you some, starts the education process for you to make better investment decisions. Again, I'm somebody that says you should be involved. You should be invested in investment products that you want to be invested in, not something somebody has sold.
Sorry, what was that email address again? Do you mind repeating it?
Gerry, Gerry, at CanadianInvestmentServices.com or .ca, either or. We'll get it.
Services.
Or you can go to the website. We have a Canadian Investment Service website. You go there, you can click the contact page. You can link to that links to it. So.
I have your website information here, as well as your office and mobile phone numbers. So if anybody wants to reach out, what's your preferred method? Phone, email? What do you like?
Email's fine. I carry my cell phone with me everywhere. So if you need to get a hold of me, there it is. I got it with me all the time. You can call me on my mobile. You can call the office, and sometimes I'm there, sometimes I'm not. But you can always get me on my mobile.
Excellent. Actually, Karen would like a copy, so we can certainly send you one, Karen. No problem at all. Anybody else watching, whether you're watching live or watching on the replay, by all means, get in touch with Gerry, and he'll send you that free copy, which is a great. It's just a wealth of information in there. So, Gerry, thank you for providing that for people. That's fantastic.
Thank you. Yeah, thanks for.
Okay, so we're just over the half-hour mark. Any parting words, Gerry? Anything you'd like to add?
I want to, Lambros, thank you for creating this venue. Again, I'm somebody, I welcome any opportunity I can to share what I've learned with people to make sure they're better educated, better informed for their investment decisions. So I appreciate the platform that you've created. I know you're a real estate specialist. I know, I see what you do. I appreciate what you do. we have the same approach, educate people, give them the right information, make sure they land where they want to be, where they want to be. So I think we have a lot of synergies in that. Again, I just appreciate the opportunity to talk to your audience, and please reach out. I'm here to help you better understand all this mirage of investment management, financial planning, taxes.
Yeah, and it's good timing as well. Like I said, tax deadline's coming up soon. So get in touch with Gerry if you have any questions or want to get maybe a different perspective on what to do with your taxes as well as with your investments. Thanks again, Gerry. So much, so grateful for having you today. And thank you to the audience, anybody who's watching. Have a great day, everybody.
Thank you, Lambros.